Hello viewers, my name is Ashok Sen Gupta. I am from School of Management Sciences, Lucknow. Today we will discuss about the topic dividend theories. This is a part of MBA program, Financial Management and Corporate Finance. So, before starting the topic, we must understand about the concept of dividend and why we going to understand this topic. So, dividend is an important part for all dividend holder, or it is a part of the profit. It is a distribution of profit among the various equity shareholders and preference shareholders. Every financial manager having its three roles: financial decisions, investment decisions and dividend decisions. So, in investment decisions, we understand about the in previous classes finance decision about cost of capital, capital structure, capital budgeting, we all understand. The third main function of financial manager is dividend decision, because sentiments of equity shareholders are very important. Any equity share or preference shareholders invest their fund in a company on expectation of earnings, and earnings on the through the dividend. So, basically there are two types of investors, as I just going to giving example. One of the investor is who just want to give wealth to these shares, he want to increase the value of the share and invest it, and having an expectation that after 5 years when his shares reach certain level, then he will sell it and get the profit. One investor is expected to get dividend as a earning. So, basically it is the role of financial manager how to maintain the balance of dividend paid to the equity shareholders and retain the remaining profit for the company's working as a working capital. So, company must have a balanced dividend policy. A dividend policy is a financial decision that refers to the proportion of the firm's earnings to be paid out to the shareholders. Here, a firm decides on the proportion of revenue that to be distributed to the shareholders as a dividend or to be plugged back into the firm. So, if company having a profit, then company or financial manager need to decide either retain the fund, retain the profit and use it for any kind of expansion plan, payment of expenses, or keep it with the company for the future, or pay out the dividend. And third option is make a proper balance. Between payout and the retention. So, that is payout ratio and retention ratio. If company gives 100% to the dividend, give the 100% to the debenture holder, the company do not have anything to run the overhead expenses. If company retain everything, then its equity shareholders sell out their shares, because their company is not expecting well. So, these are the situations, these are the situations where company need to do well and having a proper strategies. So, maintain the balance between the sentiments of the equity shareholders or the shareholders say and the company's fund. The amount of earning to be retained back within the firm depend on the availability of investment opportunity. To evaluate the efficiency of the opportunity of an opportunity, the firms assess the relationship between R and K. R and K. R is rate of investment and K is cost of capital. So, cost of capital is the amount we required to pay as a dividend or expectation of these investors. This is cost of capital, expectation of the investor, and R is amount received when company invests its fund to some other alternative source or any other investment or any other project. So, opportunity to grab the opportunity and get the proper benefit of the opportunity, and from that opportunity gives the shareholders to their value is the best dividend policy. Therefore, we will analyze in this unit the relationship between R and K. In the dividend theory and dividend models, we have analyzed the various factors or analyzed the various models given by the authors, researchers about the relationship between R and K. So, R is rate of interest received from the investment which company retained with them and invest in somewhere else. On the other hand, K is cost of capital, K is cost of capital, or you can say expectation of the investor who invest in the firm, who invest in the firm. As per the dividend model, some practitioners believe that the shareholders are not concerned with the firm's dividend policy and can realize cash by selling their shares if required, while other believes that dividend are relevant and having bearing on share price of the firm. So, there are two theories, and the topic of this lecture is also dividend relevant. Relevance theory and irrelevance theory. So, relevance theory said there are impact on share prices, while other theory said there is no relationship between share pricing and dividend payout. Some practitioners said that shareholder realize their fund or money by selling their shares, but some said that proper dividend policy will give impact or effect on the pricing of the shares. So, dividend policy here are categorized into two parts, irrelevance theory and relevance theory. Irrelevance theory given by Modi and Gilani, Miller and Modi Gilani, also known as the Millen and Modigliani hypothesis. Relevance theory given by Walter model and Gordon model. So, this theory we will discuss this theory in other lectures. So, today in lecture we will discuss about some conceptual framework of dividend policies. So, first we should understand the determinant of dividend policies. So, first determinant of dividend policies is legal restriction. Legal provision related to the dividend as laid down in section 93, 205, 205A, 206 and 207 of Company Act 1956 and now it is 1930. It is sorry 2013, now it is 2013 are significant because they lay down the framework within the dividend policy is formulated. So, in Company Act 2013 also in 1956 it is clearly written about the restrictions of and what are the policy must follow by the companies in respect of dividend pay. These provisions required that dividend can be paid only out of current profit or past profit after providing the depreciation or and out of money provided by the government of payment or payment of dividend pursuing guarantee given by the government. So, it is clearly mentioned that dividend must be paid from the profit, not from the any other source like sale of any asset then pay the dividend. No, sale of asset and pay the amount of shares of equity shareholder. It is in circumstances where company fail and declare itself as insolvent, while running company must pay the dividend only out of profit after providing for depreciation or out of money provided by payment of dividend pursuing of the government. So, any kind of debt loan taken by the company from the government, they must pay it before payment to the dividend holder. So, if you earn 100 rupees, then out of 100 rupees, if you having some kind of borrowings from the government like banks, then you need to pay the EMI or borrowings of the bank remaining to the equity shareholder as a dividend. So, this is the legal restrictions given in the Company Act. Now, move to the second one. Magnitude and trend of earning. Magnitude and trend of earning. The amount and trend of earning is an important aspect of dividend policy. It is rather that starting point of the dividend policy. As dividend can be paid only out of present and past year profit, earnings of the company fix the upper limit of the dividend. Dividend should generally be paid out of current year earning only as a retained earning of the previous year become more or less part of permanent investment in business to earn current profit. The past trend of the company's earning should also be kept in consideration while making the dividend decision. It is quite clear, like what is the trend of earning? If someone analyze, if an investor going to analyze the dividend trend, then he can analyze it by the company's past figures of dividend paid and understand the trend, how much company going to pay at maximum level. Most of the time company pay out of its current profit and remain the previous year profit for the investment purpose only. So, as an investor, if we want to invest in an existing company, not new company, in existing company, and want to purchase the share and interested in dividend earning. Some of the investors are interested to make profit by selling the shares, but some of shareholders expected the earnings. So, those who are expected to earn from dividend, they must understand the previous trend of dividend pay. It is the first point of dividend policy. What we paid earlier, what should we pay? We need to add on something. We need to give some growth on the dividend, like last year we pay 10 rupees per share, for example. In this year we want to give a growth of 10%, and now we will pay 11 rupees per share as a dividend. So, this is up to the total decision of the dividend policy maker and financial planners in a company. So, how they maintain the trend of dividend payment in a company? Too much fluctuation in trend also having a difficulty to retain the faith of the investors. Too much fluctuations like this one, एक साल ज़्यादा दिया, अगले साल कम हो गया, फिर अगले साल ज़्यादा दिया, फिर कम हो गया. सो इस साल अगर कम, पिछले साल कम था तो इस बार ज़्यादा होगा, लोग पैसा लगाएंगे, डिविडेंड पाने के बाद निकाल लेंगे. तो इट विल इफेक्ट योर शेयर प्राइसिंग ऑल्सो. So, people to retain the equity shareholder, for the long time, company also need to understand the various trend and maintain the trend properly. Third, desires and types of shareholders. Desires and types of shareholders. Although legally the discretion as to whether to declare the dividend or not has been left with the board of directors, the director should give the importance to desire of the shareholder in the declaration of the dividend, as they are the representative of the shareholders. Desire of the shareholders for dividend depends on the economic status. So, nowadays every investor get a notice of meeting, annual general meeting, quarterly meeting of the company, and in this meeting they are able to attend, they can attend, because most of the meetings are in virtual form. Investor get the user ID password through which they can join the meeting and see the overall discussions between the board of directors towards the benefit of the company, towards the equity shares benefit. So, normally retail shareholders, normally small shareholders do not have such kind of time to attend the meeting, but on behalf of that directors of the company, because they chosen by the shareholders, equity shareholders can have a rights to vote the directors at the selection of director. So, it is also on nowadays it is also on virtual mode. You can get the user ID password on internet. Through internet you can, like platform like Zoom or any other platform, you can join that and give the vote. Electronic voting also be there. So, as a director, if he represent the equity shareholder, they must understand the desire of the shareholder. The desire of the shareholders for dividend depend on the economic status. Investors such as retired person, widow, other economically weak person view dividend as a source of fund to meet the day to day living expenses. As I told you earlier, there are difference in investor to investors. Some need to accumulate a dividend, some need the dividend to meet the day to day expenses. Take example, any widow and she get the fund after the death of her husband. She put that fund in any investment or any equity share company and purchase the equity shares, and she expected that I have purchased the shares of such and such company, and every year I will get a limited amount as a source of income, additional source of income maybe, which helps to make better the livelihood. Same case in the retired person. On the other hand, wealthy investors is high income tax bracket not benefit to the current income dividend. So, those who have a high income bracket, they do not bother for the income bracket dividend, they need to increase their value of the shares. Next is nature of the industry. So, nature of the industry is depend what type of industry it is, automobile industry, FMCG, pharmaceutical, aviation, telecommunication, insurance, banking, etc., metal and minerals. So, nowadays during the pandemic, pharmaceutical companies, FMCG companies grows in compared to other. So, payment of the dividend also depend on the nature of the industry, because industry linked with the company, and when company grows, industry easily grow. So, it is also important on age of the company. Old companies, age of the company also influence the dividend decision on a company. A newly established concern has to limited payment of dividend, but those who are having a good brand, having a good establishment, they are able to pay the dividend properly. So, age of the company also make a good factor. Future financial requirement. So, future financial requirement of the firm also help of the decision making. If you need a few investment, if you having expansion plan, then you think differently in compared to the, if you do not having such kind of plan, then your dividend policy is different. So, company retain the fund for future benefit also. So, they make less payment to the dividend, and if company having no plan, future plan, then it will uh, pay out more in compared to other. So, my dear friends, these are the few determinants of the dividend policy which we need to understand about the factors which influence the dividend policies. So, dividend policy is an important factor because it helps to increase and balance the value of the shareholders, increase the wealth of the shareholders, increase the goodwill of the company, retain the company's position. Therefore, we have to understand the various factors which involved. So, these are the few factors. We will continue the other factors in my next class. Thank you. Thank you for watching this video.